The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We're going to take a look here at the German DAX like we usually do. As you can see, it's been much weaker than the market here in the United States, and it is completing a Gartley down here in just short order. We're going to see if it holds this level. Most of the news this weekend will be focused on what is happening in Buenos Aires at the G20 meeting. That should be a big thing. If there's any surprise coming out of there, my guess is it will be on trade with China. And if they sign a deal or agree on something, I believe that the stock market reviewed that as very, very bullish. And you would expect the market to go higher. But after that three drive to a bottom that we had last Friday, in all of the indices and in the major FANG stocks, with the exception of Google that made the double bottom, if we don't go soaring ahead with really good news, be really careful, because these markets overall have a long-term negative tendency in them. So just sort of keep an eye on that. That's one thing that I would be watching very, very closely this morning. And we'll be watching the news. I'll be sending out my usual video Sunday night discussing what's happened and some of the opportunities that we might have. If we take a look here at the FTSE, you'll notice that it's still heading towards another 40 or 50 pips lower, which is pretty much in context with what they're doing over in Buenos Aires. The headlines that I read this morning was that Theresa May was standing all alone. Nobody liked her. I don't know if that's the case or not, but the headlines I didn't think were very appropriate, but that's what it said. Folks, one thing that we should really pay really close attention to is the situation that we have going in the euro. And the reason why I say that is because if you'll remember, we've had a lot of things happen this week. Things that were going on that we thought were going to be, really exciting and stuff. The Fed came in and they surprised everybody. So that's interesting. And then we've had some other news from, what was it? There was another news item. I forget which one it was, but it was a pretty busy one. But in general, the market never really did anything. If you look and see, our forecast this past week was we'd get down to around that 113 area. We got to 112.70 in the euro. We never did get any higher than 114.05, and we've been in this tight range all week with a negative bias. That means the dollar is still strong, the euro is still weak. And so we're going to find out if this is going to continue. But there was some big action there when you had the market rally 600 points, 618 points in the Dow, I believe, which was on Tuesday. So, Wednesday. So we're having some pretty big moves in some of these things. Regarding the stock market, looking at the stock market yesterday, we'll take a quick look at this E-mini S&P, just going over the last couple days. And when I go to a shorter time frame, I go down to a 15-minute chart, and you'll notice that we had some pretty big swings in here. When we got down yesterday to the 27.24 level, that was down 20 handles from the high that we had made back at 27.45. Then we went up and made the 1.618 expansion up there at 27.54. Last night we came all the way down 30 handles to 27.28, and now we've had a little bit of a rally in here. Now, if you extrapolate here, we're either going to stop up here at around 27.45 to 27.48, or we're going to go and make a three drive to a top pattern in this puppy somewhere around the 27.60 level. if that happens. I don't think he can do that without a news announcement coming out of Buenos Aires or Pismo Beach. I don't know what will make it do that, but we could certainly do that without any trouble. One other market that we've been watching here for a very long time has been our old friend. Please give us a sale on Deutsche Bank, and the sale that they had at 35% discount, back in January. The stock is now trading substantially below 9. I heard this morning on the news. I don't know if that's the case or not, but we had a price objective on this. The long-term 1.27 expansion on this came in at 860, and when you have 140 or was 140 or 170 federal agents raiding all of your offices across the country, and in foreign countries too. I mean, that's not a good sign. That's like if you were the old CBS 60 Minutes. The one thing you didn't want to have is to have Mike Wallace knock on your door at 6 o'clock on a Sunday morning or Monday morning with his CBS News team getting ready to do a 60 Minutes show. But I don't know how that show, we haven't seen it for years and years. We've got an interesting set of charts from our friends over across the pond that do quite a bit of trading in the oil market, and I just wanted to bring it up, let you show them. He asked if I would bring these up, and he's a very astute technician and a very good trader. You'll notice this is the long-term weekly chart on oil. You can see the fact is that there's a cycle in here. The trouble is these nominal cycles, this happens to be a 72-week cycle, but with the market coming down as strong as it is, that's the thing that really counts. And we know that Mr. Z has told us that there's really strong support at the 61% relationship, 49 and change in the Brent North Sea crude. So that may or may not mean anything. But if you go down to a smaller time frame, and that's what he's doing here, I'll just go through these one at a time so you can take a look at it. But you'll notice that the oil down here at that 50.75 is getting pretty interesting, and then he goes one step further and he takes it down into the 15-minute, and you'll notice that was really pretty close to the low of the day today. Whether that's going to be the low of the day today remains to be seen, but that's what it's looking at in crude oil this morning. And of course it's a Friday, and it's going to be it looks like if it's going the way it is now, it looks like it's going to be another down week in crude, and it could be, a substantial one also. So I think something that we're looking at here in this would be relatively important, is what I would be watching for sure. If you remember, we talked a little bit on Monday about the platinum market, how weak it was. It was setting up. We had a pretty good rally up here around 880, and then the market started to go down, and it started to go down with gusto. And of course, we know how bad the silver market looks. If we take a look at what platinum is doing this morning, you're seeing here that the platinum is breaking down pretty badly. It might be getting close to break below the 800 level, which would be, I think, rather negative. 877-927-6648.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, we're back, and I wanted to talk a little bit about Buenos Aires. I know that's where the big thing is. If you ever have a chance to go down there, it is really, to me, it's the most beautiful city in South America. I was able to get down there way back in the mid-'80s, and we had a lot of fun down there. We were there for a couple days. I was giving a talk on soybeans, and then we went over to Montevideo, Uruguay, in search of Nazi war criminals. No, that's where they supposedly hung out, but we did go over there and see that. But it's just really a touch of Europe down there. Buenos Aires is like being in Italy. Oh my gosh, the architecture is so beautiful, and the people are friendly, and it's just really a really beautiful city. Had a lot of political problems in the past, but I think most of that stuff's out of the way. But it's a really beautiful place, a great place to visit. In my opinion, the problem is it's like going to Hong Kong. You've got a 14-hour flight, and that's not very exciting. So we'll see, folks. I want to talk just a tad here about this natural gas. This market, I have not traded it very often up until the last few months, but you'll be able to see here that you had some really big swings last night. Look at this swing from yesterday, folks. That was a $3,000 move that went that big ABCD pattern that was up there, and then another $3,000 move on the way down. I mean, that's equivalent to 100 handles in the S&P, and it trades relatively well. Now you'll notice that big spike that occurred there at 2,200 hours. That was due to very thin trading. I happened to go back and check the time and trades on this, and it's certainly there was only a few trades, maybe 10 or 15 contracts that ran it from 70. That's $800 move. So you need to use stops, of course, but it does trade off the numbers and the patterns, really quite nicely. Now, someone's asking the question about the response to the thing in the G20. Folks, I don't know how you can make any assessment on that. It could fall apart. Somebody could walk out. You just don't know what's going to happen there. In fact, you never know what's going to happen in the future. The only thing you can do is to protect yourself. When you're doing the risk-reward equation, the only thing you can do when you're placing a trade, you never know what the reward is, ever. You never know whether you're going to be right on the trade or not. That's never going to happen. But you do know how much you can risk on a trade. So that's the key point, to keep in mind, because if it does that, then you've got something that you can actually look at. So that's all I'm saying. I really don't know the news. I mean, I see the patterns, and then sometimes the news, shows that the patterns are working, but a lot of times it doesn't. It's all about, the probabilities. We don't know which ones are going to win and which ones are going to lose. That's the basic of it. Remember when Mark Douglas, talks about, trading, that the thing that most people, what prevents them from, executing their trades is that what's happened in the past. And it's those fears that you have, the fear of being wrong, which you're going to be wrong a lot. Get used to that. The fear of losing money. You mean you're never going to have a losing trade? Hello, Federal, that's never going to happen. And the fear of missing out, that happens, constantly. And the last one is my favorite, and that is the fear of leaving money on the table. Folks, the only way that you're not going to leave money on the table is if you get the high or low tick, and that is reserved for God, and she doesn't trade but 3 days a week. So you've got to be, accepting the fact that the responsibility for trading is based on you accepting that risk, and that's what you're, really what you have to do. Yeah, and the only way a trader can do this successfully over time is you have to have a belief in your ability and a self-evaluation to support your, giving yourself the opportunity to place the trade. And you're competing with other traders, but the trader that you're competing with the most, of course, is yourself. You have to fight these fears, all the time. I found that working with Tony Robbins was always a big help, because I believe very strongly in neuro-linguistic programming, and that's a good way of doing it. Have anchoring mechanisms. But even when you have bad things happen to you, a string of losses and stuff like that, what you want to do, of course, is to step back and, reevaluate. Take a couple of days off, and don't trade, because it'll come back. Because if you get overexcited, not overexcited, but if you get what's the word I'm trying to think here? The cold medicine's kicking in. If you don't, pace yourself, you get overwhelmed. That's the word I was thinking. Well, then you just can't trade. And if you start over trading, I think anybody that trades more than 5 times a day is most probably over trading. I try to keep it down to 3, hopefully 1 or 2, and that's the only time I ever do 5 or more trades in a day, when everything is going well and there's really big patterns and they're all working, and then I will look at it that way. But other than that, I don't really like to get in there and scalp very often. I'm good at it, but when I was on the floor of the Merc, I spent most of my time up in Barry Lynn's office, because I could see the floor prices, I could see the pits and everything. I could tell whether the runners were going in and out, and all I had to do was to pick up the phone, call the desk, and they would put the order into the pit. I didn't have to worry about out trades, which was a big problem. And now everything electronic, we're all equal. I mean, everything's just a, really big, a big electronic thing. That's why that can also be a bad thing, because if the electronic thing doesn't work, you're shutting down the economy. And boy, that would certainly be a really negative one to pay attention to. Let's take a quick, someone's asked a question about Apple. We'll bring it up here to let you see it here again. We're quite a bit above the price that we got on last week at that 172 and change. I believe it's trading around 178 right now, which hasn't bounced very much. Google, of course, which was the double bottom, actually let me stop 1 second. I got to collect my thoughts here. The Google made the double bottom, and that has probably one of the biggest rallies. But actually, Microsoft, it had a tremendous rally, off of the bottom too, and it was acting more bullish than some of the others. So, and this changes because they have their stock du jour each day, which one they like to pump. And of course, Apple has been the darling for the last 7, 8, 10 years, I believe, and it's got more free advertising than I think any stock in the history of the world. So we'll see if that's going to to be the case, but that's what we're watching here this morning. So let's keep a sort of an eye on that. The Facebook is also in the news, and it's also the one that has what I think is probably the bearish of the Apple's at 180, and that's pretty good. And that's got the most bearish of them all is the Apple, because of that big island reversal. Something happened in August with Facebook. I think either somebody pulled their money out or whatever. We'll see. 877-927-6648. Call in. Give me your questions.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I posted the chart of silver, and we've been saying for quite some time this is certainly starting to have a bearish tone to it. We did have that long-term 1.618 expansion come in at 1385. We've had some rallies here, but each rally's got lower tops, and it certainly is, it didn't even respond well to what the Federal Reserve was talking about the other day. So that's another one that looks, real interesting, to sort of pay attention to. So I think that is something we ought to think about, because the gold certainly doesn't look like it's acting very bullish also. So we'll just kind of keep an eye on that. Now, if we take a look at Bitcoin, I know we're not trading this, but remember we have a really good. I'll forget the cough syrup, Marshall Lynn. I'll just take the tequila. Anyway, it'll kill the pain, but it don't make you feel any better. Okay, hold on. Yeah, we'll activate that cold medicine for sure, David. You're not kidding, but then you fall asleep. If you take a look at the Bitstamp here, this is the Bitcoin, basically one of the exchanges. Anyway, our target on this was 3,800, and we did get down there. I think we're trading at 3,900 right now, but it's really getting a lot of press now. In fact, the thing that I saw last night on the Bloomberg was it was the death of Bitcoin is what they called on it. But actually, if you look at Bitcoin going back to 8 years ago, it's had 4 80% corrections. I know it's hard to believe, but even when it was at $500, it went all the way back to $100. So, it has these huge corrections. It's not about cryptocurrencies, folks. It's, from what I'm told, and I have to believe John Jameson, because he's a pretty smart cowboy, is that it's all about blockchain technology, and whether that's going to happen in the future or not, we will have to wait and see to see how things are going now. Very good, Tucker. That's a good play on words. All right. Let's take, someone's asked a question about a long-term chart here, and I wanted to bring it up here just to show it to you. That is the soybean chart, and here's one, folks, and it's acting quite nicely. The soybeans and corn and wheat have rallied a little bit this week, and if they come through with a tariff reduction on the agricultural products and agricultural equipment, as part of a deal with China, I would think the soybeans would start to accelerate. We're up again today. We went right down to key support there last week, and now we're approaching the $9 a bushel level again. And the one thing we do know is that people do eat. Remember, oil is indigestible, but you do have to eat. So that's something that you might want to keep in mind as we're looking at some of these things here this morning. Okay, one other question about a long-term chart, and let's get that one up here. Let's see if we can get it. And that is in the coffee. And I think coffee is down near a pretty good buy spot down there at that 111 today, Mr. Z was telling us. And you'll notice that we've made that double bottom from 2013. That happened to be a nice butterfly pattern there. And at that 100, got down to 96 and change, and then rallied 25 bucks all the way up to 130, and then it backed off to a 61% retracement down there around that 112, 111 area. So this should be an area where it's going to test, what the markets are going to be looking at on a longer term basis. We've also had a question about. Hold on one second, and I'll get it up here, folks, about the cattle market. And if you'll give me 1 second, we'll get up to these cattle here, and we will get, oops, I don't have the D's. Oh, here it is. Yes, this is the one, and we wanted to bring this to your attention because we were really looking at these cattle, and we went through that level where 0.5 was very, very quickly and continued to go higher. So this pattern, this 135 pattern that we had on the Christmas cattle actually did not work, but it did not work right away. So you didn't have to take much of a risk on that. And we of course, we're watching it closely. So really, they never really instituted a trade, because when you got to the 0.5, it was a very wide-ranging bar, and that made it say, well, you got to use some common sense and not try to catch a falling safe. So those are just a couple of the ones that we're looking at. If you have any questions, folks, it's 877-927-6648, and hopefully next week we're going to have Bill Meridian on as our guest, and hopefully Tom Bost of Financial Cycles out of Sarasota, Florida, which would also be something that he's always interesting. He's also ranked in that Timer Digest that Steve Rhodes happens to be leading in, and we're always proud to see Steve, do the work that you have here. Now, I've got one other long-term chart that people have asked about that has been actually holding up relatively well, and it's related probably to what's going on in South America, and that is that the soybean oil, you'll notice that the top that was made up there, that's a beautiful head and shoulders pattern, folks. It's as perfect as you can get. The left shoulder and the right shoulder are equal, and they're also equal in time very closely. In other words, they're not going to be exact, but it's going to be within a day or two from the left shoulder to the head and the head to the right shoulder. When that right shoulder is at the same price as the left shoulder, that defines what a head and shoulders pattern is. Now, if the right shoulder is a lot lower, that's even more bearish. I mean, that's extremely bearish head and shoulders pattern. So this one happens to be normal, and we went down, made new lows. We've made a double bottom, and now we've rallied above the $28 a pound level in soybean oil, but it's still a little bit early because if something falls apart, with the things down there in China, it's going to be, really pretty nasty. So we got to pay, close attention to it. So far this morning, the S&P has only gotten up to that 2740 level. As long as it stays in this range today between 2730 and 2740, which we know that's not going to happen, it's probably going to be a nothing day. But the key level is above 2748. If we get above that, then you're looking at that 3-drive pattern at that 2760 level. But we'll update that in the weekly newsletter to see where we are as far as how far this rally is going and where we're going. The euro is under pressure again. It's pushing down towards the 1345 level, and that is usually not a good sign. So it's a good sign for the U.S. dollar, but it's not a good sign for gold. And as you can see now, February gold got down to 1223. We're down $10 from where we were just the other day. So we need to watch that, because the gold, silver, and platinum all look very bearish, folks. In fact, the gold has many of the characteristics that we had with the crude oil, and you can see what happened in crude oil. And remember, they use crude oil a lot more than they use gold. So I don't know if anything's going to happen that way, but the fact that gold is acting so poorly is one thing that we really need to keep in mind. That's what it looks like. When we come back from the break, we want to talk about notes and bonds, because we're right back to those highs again, and we're going to see if we go popping through. Whether we will or not, we'll wait and see. 877-927-6648.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks. We want to take a look at the Treasury notes and Treasury bonds. Now, you notice we've had this ABCD pattern set up here, and in fact, we're actually trading a little above that D level right now, right? Just a tick or two above the 61% retracement. We've been up for 10 days in a row here, so it's very, very overbought, but that doesn't mean it can't go higher. And if we're wrong about this bottom, if this big ABCD bottom is really a big one, you know, possibility we could, you know, get up to the 121 level. So you don't want to mess around with this, especially when the Federal Reserve is in there, you know, messing around. So we'll see if this is it. So this is completing the ABCD pattern in the notes and also in the Treasury bonds. We're also doing the same thing. We did get I'll have to get this up here. This is as of, hold on one second and let me get this up here. Hold on here. We're getting it up into this area here. We're a little bit higher than this level, so keep an eye on it. We're a tick or two. I mean, I believe we're very, very close. But again, we're 10 days up in the move, but that doesn't mean it can't go 11, 12, 13, or 14 days, folks. That happens more often than we think about. So let's pay sort of attention here. Oh, we've got a caller from Princeton, New Jersey. Beverly, how are you?
Pretty good, I've been told.
Well, this is good. I like it. That's a very positive thought. What can I do for you, young lady?
Well, the first thing I want to tell you is that Mount Lucas runs north and south. So
I know that.
On the north side of Mount Lucas.
Yeah.
But could you explain the difference between a Gartley and a butterfly?
Yes, it's very simple. The Gartley pattern is where you have higher lows and higher highs. Or in other words, a lower low and a lower high. A butterfly is basically a failed Gartley pattern. In other words, instead of stopping at ABCD, it continues through the D point and goes all the way up to 1.27 or 1.618. So a butterfly is a Gartley pattern that is failed. That's the way I've defined it.
Is which one is a bear and which one is a bull?
Well, the bearish Gartley would be when you have an we have an X price, you know, say up at the high level, and then the market comes down and then makes an ABCD pattern, but the D is lower than the X price. And
Okay.
if you're doing that, then that's what you're trying to see. But the butterfly, what it'll do is it will go through point X and go down to her 1.27 or 1.618 expansion of that
Mhm.
X to A move.
Okay.
Okay. Did you ever
talking about them, looking at a chart, and I don't know which one is which.
did you ever get a copy of my my book, Trade What You See?
No, I have Tom O'Brien's book though.
Why don't you do this? Drop me an email, okay?
Yeah.
Drop me an email, because sometime when Santa's in a happy mood, sometimes he sends things out to his little elves.
Okay, so that's just Larry at TFNN.com, right?
No, Larry Pesavento at gmail.com. That's the best place to do it. Okay?
Gmail. Okay, I'm writing it down right now.
All right, and listen, I want to wish you a happy holiday.
Well, I don't know if I can take any more because I've already gained so much weight over Thanksgiving. Stuffing.
Well, I think
gravy. We still have turkey left. I mean, it's just.
Oh my goodness. Well, at least you have a big family to take care of. That's wonderful.
Okay.
Okay. Thank you for calling in. You bet. Thank you, Beverly.
Okay.
You bet. Okay, let's take a look at this U.S. dollar, folks, because this is the key to all this stuff. We're trading up near that 97 level again today. We'll probably break through it here. If you'll notice here, if we get above this 97 and change, we're going to be looking at 98. 98. Well, we're only 1 hour. We're one point away from that, so we probably make that. That'll be an interesting one, folks, up here at that 98 level in the dollar index, because at that point you're going to be looking at a really nice 3-drive pattern that's taken well over 5 weeks to complete. So we watch this level of 98 in the US dollar. That means that the euro is going to be below 112. I would think we're really close to making a double bottom again, because we're at 113.43 right now, and that's what I would think we'll be looking at. You're right, Tucker. A higher dollar does put extra pressure on gold, and gold does look bearish to us, and we still think it's heading down into those areas. But whether it will continue or not, we'll just have to wait and see, because it's just one after another. They just keep dropping. The platinum and the silver and the gold, I mean, they're just acting extremely negative. So we got to be very, very careful as we look at these here today. And now I wanted to mention one other thing, and if you'll give me 1 second, I'll get the chart up. It looks like we're going to have a new low here in the crude oil. We've dropped about how much have we dropped today? We've dropped we dropped another $2 a barrel in the crude level, so it doesn't look like it wants to hold up in this level very long. The next one that someone's asked about, of course, was the British pound, and we still believe in the British pound. That unfortunately for Miss Theresa May, it looks like we're heading down to that 125 level. We're down to low 127s right now. That's not very far away, and with three major targets here, you have a really good chance of getting down to an area that would really be very, very strong support at that 125 level. Remember, we got as low, I believe, on the long-term weekly charts, we got as low as 110 right after Brexit in June of 2016. So this would be the culmination of that. And that would be a very interesting play for the British pound should we get to that level. Now, you'll notice the 135 pattern that we had that finished up around November. That was a really interesting pattern, of course, because you have the 3 lower highs, which defines a trend. A trend is if you have lower highs and lower bottoms, that's an uptrend. If you have higher tops and higher bottoms, that's a downtrend. So if you want a definition, don't worry about a 200-day moving average. It's what the highs and lows are doing. And a 200-day average is nothing more than it says it is. It's moving and it's average. And with average, you just don't cut the mustard. So keep an eye on these patterns and ratios, because when they do work, they work very well. And when they don't work, They don't work. That's it. But they do work more than they fail. That's the main thing. But we are heading lower here in the British pound. The last one that we wanted to cover, of course, is this Japanese yen. This has had a very bullish bias here this week, and it's continuing to move in that direction. We're heading towards that 114.80, 115 level in the Japanese yen dollar. So that's another one that we're going to be watching here. So we got a break coming up in just a second, and then we got to wrap up the show. Can someone give me the last price on Deutsche Bank, please? I'd like to know where it opened and where it's trading. I would, not that I'm buying it, I just want to know for educational purposes, if someone would please give me the last price on the Deutsche Bank, that would be very, very helpful. 916. Okay, maybe it hasn't, maybe it did not break, and thank you, Basil. Okay, thank you so much. Okay, we'll be right back, folks. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we want to take a look here at the euro. This is what we've done the last, this is a 4-hour chart, so this gives us the last month. And we have lower tops. That's a downtrend. You can see we've had lower bottoms. Right now we're setting at the 61% retracement of the low we made on the 28th. That's going to be an interesting spot to see whether it can hold, because if it can hold that level, actually that level's a little bit lower. Let's get it straight in here. That comes in at 113.20. We're at 113.39 right now. So anything below that 113.20 would probably set up for another move heading downward. Much like we're looking as an upward move in the dollar index. So those are just a few of the things that we're sort of watching this morning that would be pretty interesting to look at. So watch that euro. That's a key to that, because that's the money moving around, and that's real live money. As far as the news coming out of Buenos Aires, anything could happen. So, wait till the news happens and see how the market reacts to it. You'll be far better off than if you try to anticipate what somebody's going to do, especially in the environment that we have, going on at this particular level. Another question someone's asked me about Russia and Ukraine. Hey, they've been fighting over there for years. I gave a speech over there a few years ago, and I was going to the hotel. There were army tanks on both sides of the road, one from the Ukrainian army and one from the Russian army. So that's nothing new to those folks. Hopefully they'll work it out and not cause any more hassle than it's already been done. One thing, folks, make sure you do something nice to some folks that don't have very much to go on for these holidays that we've got coming up here, starting in December, coming in on Monday. So we'll be trying to do some things for the folks that don't have very much, and believe me, many of these people have even less than nothing. So just to remember that can be a really tough time of the year for these people that don't have anything at all. Okay, we'll take a little 877-927-6648.
Folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.